What's up guys, it's Diego and today I'm giving you the full masterclass I wish I had when I started trading. So today we are going to be on the charts, on the trading softwares. I'm also going to talk raw camera review guys. It's going to be a very long video, but there will be no bullshit, no hype, just the same exact system, the tools, the risk management and the psychology that I use every single day to trade crypto professionally. So I did a setup with all my screens with a bit of all the softwares I use. So we are going to go through all of them. Okay, you guys can see that we have a bunch of things to see. We're going to detail every single indicators, every single tools I use, and I will explain you guys how I use them and why. And we will also have a module about risk management, and we will end the video with the psychology because this is very important. So if you're tired of trying a million strategies, feeling emotional, inconsistent or stuck, this video is going to be your reset button, I think, and I hope so, because I'm going to break down everything in a way that any motivated trader can understand, even if you are learning alone. And I will be here to support you, to help you, and this video can be your memo. You can come back here and look when you have, for example, any questions on a software, or you can just ask me in the free Discord that is in the description, by the way. So today we are going to cover my complete strategy, so how I use VWAP, TPOs, order flow. So you can see that I have basically all of those open here, and we will see how to use them today. Then we will see all the tools I use and how I actually use them. Proper risk management, so we will see the rules of risk management, we'll see the mathematics behind risk management, etc. And then high level psychology, which is the real game changer, the mindset you guys need to have. So let's see how it goes, guys, and I hope you guys will enjoy this video. So today we will start with the strategy model. So before everything, guys, you need to understand this. Trading is a game of context first and entry second. So you guys need to have a context to understand what you are reading on the chart, and basically if you don't have this, it will be complicated to make money on the long run with trading. And most traders do the opposite of this. They look for entries without having a system behind them. That's why they fail. That's why I was failing before, and since I changed that, this is why I can now be profitable with trading. So my entire strategy is built mainly on three things. So the first one is the TPO. So this is an indicator that I will use in most of my charts. So for example, here you guys can see that I have a big TPO here. Here I have the daily TPOs, okay? If we go on TradingView, TradingView is here. I always have TPOs. If you guys watch my YouTube videos or my streams, you guys probably saw that I always have these indicators. And so what are TPOs? TPOs, you can have them first in a lot of softwares. For example, in TradingView, you just go here in search indicator, you tap TPO, it's opportunity time price, for time price opportunity, and you will have it. I think that you need to have the TradingView Pro version, but honestly guys, if you are willing to be profitable with trading and you don't have TradingView Pro, I don't know what you are waiting for. Same, you can have it on Market Monkey, or you can have it on Kyoto charts, you can have it on Exo charts, and I think it's a paid feature. But again, if you guys really want to make money with trading, you have to buy these subscriptions, okay? Because these are just tools we have to use every day to trade, okay? So what is TPO? TPO is time price opportunity. So for example, let's add something that is similar to the TPO, which is the VPVR, volume profile visible range, okay? If we add it here, you can see it's on the right. So what is a volume profile? A volume profile is a profile, okay, with horizontal levels, horizontal bars, where you have the levels where the volume was the biggest on this chart, okay? If we dezoom, okay, we will see that it will change. It will take basically the first data from the first candle on your screen, okay? That's the volume profile, and it only counts the volume. Then you have the TPO. The TPO, which is the profile here, is based on time. So what does times mean? Every single block here is a 30-minute period, okay, on the price. So it means that at this level, the price stayed 30 minutes plus 30 minutes plus 30 minutes plus 30 minutes plus 30 minutes, okay? And so basically you can change this, of course, in the settings. You can put 5 minutes, 30 minutes, 15 minutes, more or less. But basically this will give you the levels where the price stayed the most time. And at the end of the day, where the price stayed the most time is also where the price had the most volume. It's the fair value of the price, and you will have important levels such as this big level that is the POC, so the point of control of the price, the fair value of the price, and then you have the value area high here and the value area low here. So basically, what are value area highs and value area lows? These are levels where the price is staying, okay, that's the range where 70% of the time was spent within that range. So for example, this is daily TPO. So we can see that, for example, 70% of the time spent today in today's candle was between this and this level. Okay, this is where 70% of the price was spent, and the POC is where there was the most time spent. Okay, so the fair price of today is 92K300. And for example, what I love and what I want to look at when I look at TPOs is the rotation between value area highs, value area lows, and the POCs. Okay, so if the price cannot break out above the value area high and expand towards new value, then the price is staying within the value and is rotational into POC and then the value area low. Okay, then you have also the single prints and the power highs, but this we will talk about it later maybe. So just before continuing the video, I wanted to inform you guys that we have a free Telegram. There's already 1,000 people inside and it's totally free. The link is in the YouTube video description. You guys can join, and I basically share everything I do. When I go stream, when I take a trade, but most of the trades, all my analysis, I send educational content. There's a bunch of content. For example, we streamed here, we took a long right here. Okay, you guys can see showing the position. Again, we take real position. If you guys watch my stream, my videos, you can see that we are not lying here. Took a tiny scalp that ended up in a loss, but that's fine because therefore our trades went to profit. And then with it, the full TP on Ethereum and also on Bitcoin, also updating you guys with bubbles, etc. Trying to stay in touch with you in this channel. So if you guys are interested to be part of the community, just check the link in the description and I will see you guys in the Telegram. And so basically these are first levels that you want to see. Then what I want to see also, I want to look at the VWAPs. So let's remove everything here on TradingView so it's easier. So, okay, I will remove, well, that's a trade I took, but let's remove the drawings. What I love to see, you guys can see I have a bunch of VWAPs. So the first one I love to use is the rolling VWAP. Basically, the rolling VWAP is the VWAP that will be the closest to the price, that will follow the price with the volume. Again, what is the VWAP, guys? It's volume weighted average price. So it's similar to an EMA, so, or like MF, like it's like a moving average. The only difference is that a moving average will make basically the average prices of the last 21 candles, of the last 50 candles, while the VWAP will do the same thing, but there is a weight. What is a weight? It means that, for example, if on it takes the 50 last candle, imagine on the 22 candle and the 25 candle, there was a crazy amount of volume, okay? And based on that volume, there will be a higher weight in the calculations. So the VWAP is actually following even better the price because it's following the price thanks to volume. And volume is also very important in trading and to read the prices, because when there is volume, this means that the people and the retail traders or the institution are wanting to buy at this price. So this is very important to track it. So this is the thing. Okay, so there is the rolling VWAP. I also use the weekly VWAP here. So the weekly VWAP, we will use it more in the 15 minutes. So you guys can see that basically these are the standard deviations. So these are like the value of the VWAP. So usually the price stays within these levels. And you have in blue the weekly VWAP. So that's the VWAP that is starting from the first day of the week, and it's reset every week. You can see here, reset. Okay, new week, new VWAP. And so basically this is a very strong level to use. I also use it, for example, here. My weekly VWAP is always on my chart, or you guys can also see it here on Market Monkey. Up, Market Monkey here, the blue line is my weekly VWAP. You guys can see that, for example, we were holding the weekly VWAP, very strong support, bounce. When we lost it, boom, rejection, okay? Here we flipped it, retested, and now we are retesting it. Maybe we will have something today. Let's see if the video is long enough. And here is the daily VWAP, which is also important. Then I will open a new chart that I didn't open here. So it's in my layouts. Let's open the VWAP copy. And so I also want to look at the different VWAPs over a period of time. So for example, here I have the monthly VWAPs with the weekly VWAPs with the value. Here I have the monthly VWAPs, okay, with the value. Here I have the daily VWAP also with the value. So these are very important level again that I use in order to make my levels and to trade, okay? And the last one we have on TradingView that I really love to use, and that you guys probably saw, I get a lot of requests about this indicator in the streams, is the rolling VWAP. So I use the rolling VWAP 7 days, 30 days, 90 days, and 265 days, okay? And these levels are very meaningful to me because usually the 7 days, 30 days VWAP and 90 days VWAPs, they are really good levels to make decisions and to say whether we are bearish or bullish on a medium time frame, I would say, because we are accepting above or below those prices, okay? And this is bearish or bullish. And I use these VWAPs in order to make my decisions. For example, here, I'm bearish because of this horizontal level that we had here at 94Ks and the yearly open, but the problem is that we are low-key flipping the 7 days and 30 rolling VWAP. So if we hold these levels, I think that we probably, okay, go for higher and towards the 90 days rolling VWAP and the 365 days rolling VWAP. Let's open also another template, the market update one. You guys will see that I also use the daily VWAP, okay, for my higher time frame levels. So if I remove that and I keep the VWAP, you guys can see that the 265 days rolling VWAP in the daily is literally the bull market or support or the bear market resistance. So for example, you guys can see that each cycles, okay, we stayed above here, okay, whenever we lost it, bear markets, okay, flipped it here, bull markets, lost it here, bear markets, flipped it here, we stayed above, okay, held it here, and here we lost it. So maybe we're in a bear market now, maybe that's a deviation and we reclaim it, but that's a very important level I want to look at in order to have a context, okay, because it's very important to have a context. How to have a context also? You guys can use EMAs, okay? I use the 21, which is the red one, the 50 EMA that is the blue one, okay, and the 200 that is the white one. And basically this gives me the trend. And we can see that right now in the daily time frame, we are in a downtrend. We are under the trend. We had a bearish cross here. So that's bearish. On the weekly, I want also to have a context. We are under the 21, under the 50 EMA. So the trend is bearish and it looks like it wants to do a death cross. So maybe the price will bounce and save it, but whenever it will do a death cross, that will be very bearish. The last time we did a death cross in the weekly EMAs, it was in April 2022, and that was just before the dump before 16Ks. So that can be very bearish, and we can go maybe to 60Ks, 50Ks. Well, it's not a market update video, but it's just to understand that with these EMAs and with these moving levels, okay, we can have a context. And with this context, I will be able to have my bias for the swing trades, and I will be able also to have my bias for the days, okay? For the days, it will be more with the daily. For example, I don't know, we are very close to the daily trend. I will be looking for shorts, okay, for day trades, scalp shorts at highs around these levels, because these are high time frame resistance. And if I have a trigger on the low time frame, I will be able to enter. And how to get the triggers in low time frame? I do it with the data and the order flow. And this is where these levels comes. Oh, we're dumping. We are dumping. That's great. That is great, guys. My short is still printing, so that's cool. I'm still in this short, but yeah, that's not the point. So how to look at it? We look at the data. There is a lot of data to look at. For example, here in Market Monkey, I have the VWAPs here. And you guys can see here, that's the order book profile. So these are the orders, the limit orders that are placed on the markets. There are asks or bids. So people that want to sell Bitcoin or people that want to buy Bitcoin. We can also see them here. Okay, we can also see the orders here with the zoom. And we can, I need to zoom more, sorry. We can also see them like this, okay? So that is very good. That is very good and that's very useful. Now, what we can see also is the open interest and the perpetual data. So we have it here on Market Monkey. So the open interest, the net longs, net shorts, we have the order book imbalance, so whether more people are buying or selling, and we have the footprints. Here we have obviously the TPO. So that's one of my templates. I have another template here with the TPOs, so with the weekly TPO and daily TPO. Okay, looks like we're going lower. Okay, that was my plan for yesterday. Bit of a deviation, but still thinks we are rotational right now towards 87, 86K, so that's why I'm still short. You can track the data here also on aggregate trades with my templates, where I have basically the spot CVD and the perp CVD. So what are CVDs? CVDs are cumulative volume deltas. So cumulative volume delta is basically the net longs plus the net shorts, okay? No, the buys in the perp contracts minus the sales in the perp contract. So basically you will see whether more people are buying or selling in perp or in spots. And this can be very useful because sometimes you will see divergences between the spots and the perp. So let's see. For example, here, when we pumped here, for example, you guys can see that the spot, okay, is under the perp. This means that these moves, okay, they are provocated mainly by the perp market. So basically by the leverage traders. And you can see, for example, when spot is really selling heavy, you can have the delta here. Here you can also track Binance spot orders, Coinbase spot orders, Bybit spot orders. Here you also have the Binance spot and Binance perp differences. And so you can track all of it, okay? Then you can also have it here on Coinalyze. On Coinalyze, we have different things. We have the funding rates. So the funding rates is basically the rate paid by longs or by shorts, whether there are more longs or shorts in the market. So you can track if people are more positioned in longs or in shorts. You can see here the price. Here you have the aggregated open interest delta profile visible range. So basically that's the open interest but in a profile. Here you have the open interest with the candle. So open interest, it's net longs plus net shorts. Okay, so you can see the leverage position open on the market. Here you have the CVD futures, and here you have the CVD spot that is literally dead. Okay, the CVD spot here, we were bouncing here and the CVD spot was selling. So that was bearish as fuck. Longs were entering, like that was like an easy short. So that's why I stayed in my short. So these are all the positions. Now, the last thing I want to look at is the footprints. So with the footprints, I will be able to see inside the candles, okay? And I will be able to see whether people are going long or short and if they are getting trapped at high levels. And I can see the delta. For example, here I can see that on the way up, we had 250 million delta in longs, 33, 183, 9 million, 180, 100. And so we had a fucking ton of longs accumulating here on the way up, okay? We also can see here that the funding rates were increasing, so longs entering. We can also see that the spot was selling. So basically, perp traders were longing into resistance while the spot was selling. That was bearish, and that was literally a short trigger. This is why we short. That was an easy one. Honestly, that's like an A+ setup. That's a class example. That's perfect for today's video because you guys can really see how it goes. Just checking if the microphone works. That's fine. So now, the last thing I want you guys to understand is also the data that I use. So I will use, for example, Brighter Data, which is a tool that allows you to see probabilities when it comes to trading. So for example, if we go on the summary here, we will have, for example, the weekly and the monthly, and we can see that we use the data from the last 3 years, okay, since the start of the bull market. And we can see, for example, in the weekly that based on time and based on the last 156 weekly candles that we have only 2% chances to take out the weekly high. And we can see that based on distance, so the distance of the candle, we have 42 chances to take out the weekly high, okay? We can also see on the monthly statistics, it's using the last 35 monthly candles, that we have 34 chances to take out the monthly low based on time and 25% to take out the monthly low based on distance. And these tools are very useful. I use them personally in the weekly and monthly, but I love to use them for the trading on daily and session because, for example, sometimes the price will be really close to the daily high, but you have 20%, 15%, 10% chances to take the daily high. So the probabilities are very low to take that level, while the price is very close. So you can enter, if you have confirmation on the order flow and on all the other tools, to do the inverse and have your stop loss just above the daily high and target another level. That's something that I added to my trading a few months ago. So this is something that really increased my profitability. Okay guys, so I literally took 15 minutes to explain you some things that I was recording with the camera that was still like this. So let me do it again. So now what we want to look at is how to basically determine which setup is good or not and how to use the strategy. So what I want to use is have layers of confluences. So what I want when I take a trade is to have a lot of confluences between all of my indicators, all of my bias, all of my data, and have a context. So the first one is basically to have a trade that makes sense when it comes to my context. So for example, on the higher time frame, so like we saw it here in the daily, I am bearish. Okay, we're in a bearish time frame. I want to take a swing short. That's the first thing, okay? Or we are at the lows and I want to play a swing long. But if we are, for example, here, I won't play a long. That doesn't make sense. We are just very close to the downtrend. Like, I'd rather wait for a breakout and enter after the breakout, okay? So you have to have a bias, a context. Then I want to look at the lower time frame. So we will take an example of the trade from yesterday. So the trade I took yesterday was here, okay? I entered around the yearly open. I had my stops around the weekly highs and my target is still the same, 87Ks. So that's the setup right now that we have. And so I will explain you guys why this setup was very good. The first layer of confluence we have is from Coinalize and from the perpetual data. So we can see that the funding rates are increasing, price is increasing, CFD futures is increasing, and the CFD spot is decreasing. So there is a divergence between the spot and the perp is really pushing the price high. So that's the first confluence for a short. The second confluence for a short, okay, is coming from the footprints. So in the footprint, we can see that here we have, okay, almost a billion, no, like 500 million or a bit more of longs chasing the price in terms of delta at these levels. And usually 99% of the traders are losing. So if we have a fucking huge ton of longs entering, we have high probabilities to reverse lower. So that's a second probability that we can add. Now what's the third? The third one comes from the data. If we look at the weekly, we only had, okay, 2% chances to take out the weekly high based on time. Yesterday, it was like 6 or 7%, which was very low. And if you guys look at this, the weekly high is literally here. So the stop loss was pretty close, okay? And my target is still the same, 89Ks or 87Ks, still based on this setup, okay? So that was a very great entry. Again, 3. Now, what is the fourth entry? If we go here again on up Spaceman here, if we go, let me decrease the camera so you guys see even better. Okay, so if we go here on the 3-week composite, okay, so these are the last 4 weeks, 3 weeks plus the current one, so it's 3 weeks, but it will be 4 weeks at the end of the week. Composite here, we can see that the value area high is here at 94Ks. So that's the resistance. We were very close to this level. That was another confluences because I feel like the price is going to stay within the value and stay rotational towards, again, POC or towards the value area low that we are targeting basically in this trade, 87Ks, okay? So that was another confluence. Another confluence that we can have is from the horizontal levels of the prices. So here, if we add the levels, we can see that we retested the yearly open. That is a resistance. That's a fifth confluence. Now there was a lot more of confluences. For example, here in the footprints, here in the, where is it? On my market maker dashboard. So that's a very private indicator that I have that we've built. You guys can track, for example, the asks and the bids of the market makers. And the asks were heavy as fuck while the bids were very thin. And so that was a great signal to go short again because there was way more sellers on the order book rather than buyers. And this is basically causing lower prices on the future. Now, what we had here also, we had a lot of ask above the price. You guys can see here, 50 mil, etc. that appears here and that were resistant. So that was a great level for a short. So this is basically how you rate it and how you get A+ setup, A, B, B plus, or C setups. And we will see later, okay, in the course why this matters and how we can use them in an efficient way to size the trades, okay? So you go bigger in the A plus than you go in the B minus. That's logical, okay? And also in terms of psychology and in terms of maybe sometimes not taking the trade, okay? Sometimes you don't take the B setups because maybe maybe you already took 2-3 trades today and it will be over trading to take a B setup, okay? While if you took 3 trades but you have an A plus setup and it's really a very good setup based on your strategy again, not based on you, based on your strategy, so based on your rules. It's not, oh, I feel like the price is going down. No, it's not. You cannot trade like this. You have to follow a system, and your system tells you, yes, this is a good moment to short. And if it is the case, then you can enter. So that is very, 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 very important. Another quick reminder, guys, that I do weekly and daily updates in the free Telegram that is in the description of this video. So you guys can see, for example, that every Sunday I send an update to you guys where I explain my levels, what is my bias, etc., and what I think for the next days. So if you guys are interested in seeing all these analyses and also seeing how I trade, how I analyze, etc., and having some proximity with me in the community, check the link in the description to join the free Telegram, and I will see you inside. So now we can keep going with the video and the free course. So now basically, just to end this technical analysis part, okay, we will just make a recap of the tools I use. So the first one is Coinalyze, okay. On Coinalyze, you guys can have the perpetual data, okay, so the funding rates, the open interest, the CVD spot, futures, the liquidations, etc. Then I use my crypto dashboard where I have the ask and the bids of the market makers. I have the perp CVD, the perp spot CVD, and the perp imbalances that gives me trigger also, and I can have the same thing on Ethereum, XRP, Solana. Okay, I just click here and it will give it to me, and I have all the altcoins also. So that's a local file that is running through API and just it's a WebSocket basically. So that's a personal indicator that I give to my students in the mentorship program. Then I use aggregate trades where I have the liquidations, where I have the Binance spots, Coinbase spot, Bybit spot, buys and sells. Okay, the data I can see Binance spot and perp CVDs. Same here, I can see the overall market perp and spot divergences, if it's bullish or bearish, data spot, delta perp. Then on Market Monkey, this is kind of creative mode of the indicators because you have all the indicators here. Literally, you can even just trade based on that. And so here I have a bunch of templates. So you guys can see here all my layouts. I have a bunch of templates that I use with the liquidation heat map. For example, here I have the liquidation heat map. I also have the DOM. So the DOM is kind of the order book. I have the statistics of the price. I have the footprint, the TPOs, the VWAPs, etc. On these templates, I have the TPOs on the weekly and the daily. Here I have the VWAPs, so weekly, quarterly VWAP. I don't know why it's not showing, but here should be the quarterly VWAP. I need to put it back. The monthly VWAP, the value, and the yearly VWAP and the value. And here I have also the order book heat map, so I can see instead of having the order book with the buys and sell in like an Excel file, kinda, I have it in the chart. Okay, so that's better, that's more visual. I have the open interest, net long, net short, order book depth ratio. I have the footprint from Bybit, so I can track what are the traders doing on Bybit. And here I have the TPOs in the monthly, the daily, and the weekly. So all these levels can help me to get more information. Here on Kayotaka, Kayotaka, I always have, it's always complicated to say this software. But basically here I track the footprints, so I can see the aggregated footprints of all the traders on all platforms. Okay, it's aggregated here and I can see what they are doing, if they are chasing longs or if they are chasing shorts or whatever. On Brighter Data, I can see the statistics based on time and based on distance on all the candles. I can also use it for all the cryptos. I can use it for Forex, index, stocks, but personally, I only use it for BTC. On Velo Data, we didn't talk about it. On Velo Data, you can choose, okay, a period of time. So for example, I don't know, the last 6 months, and you can see the data from the last 6 months on a lot of things, on the liquidation, on the BTC CVD, on the 3 months annualized basis, the open interest. But the one I really love to look at is this. the 6 months average return by hour and by day, because that gives you a bias for the day. For example, we can see here that most of the time in the last 6 months, Wednesday in average was a positive day, while Thursday, Friday was a negative day, and Sunday was a positive day. So you can expect price to go up statistically Wednesday and Sunday and to dump the other days, okay? And if you want, you can use 1 year basis, you can use the last 2 weeks, you can use the last 3 months. Same for the sessions returned by hours, you can use for the last week, for example. And we can see that during the New York session, the price were pumping. Right now, the price are literally dumping, but it doesn't work all the time. And then I use, of course, TradingView for my levels. Oof, Ethereum is going down. I feel like I will be able to buy Ethereum at these prices very soon, okay? Under 2K 900 maybe. And so I have a bunch of templates. I also have this one that I always keep open, guys. That is my monitor with the Bitcoin price and the trend and the SMA VWAP bands in the 1 hour, 4 hour, 15 minutes and 1 minute. So I have a context with the trend, etc. Because for example, in my trading system, I have some rules. So here on the 4 hour, I will never go long, okay? If the stochastic RSI here on the market cipher on the 1 hour and in the 4 hour are overbought, okay? I won't take a long. That doesn't make sense because it's overbought. And same as I will not short now as the stochastic RSI on the 15 minutes or on the 1 hour is at close. That doesn't make sense because the move down already happened. So this is not what I want to do. So yeah, that's also some rules that I have. And now we will move towards the risk management, because it's good to have a nice strategy, but if you don't have risk management, you will not make money on the long run with trading. And I will explain you why. Because, for example, most of the traders, okay, they maybe have a good strategy, or you maybe did that, okay? You maybe had some days, some weeks where you were very good at trading, your strategy was working, but you had that one day when you blew up an account or where you lost 40%, 20%, 50% of your account just with one trade, just with one mistake. And this happens to all of the traders. This happened to me the first 3 years I was trading, okay? It's been years I've been trading, even if I'm young. I started very young, and you guys, that if you guys follow me on X since I started 5 years ago to post on X, it's been time that we've doing this. But basically, it happens to literally everyone. And even some friends that I know from X or influencers in trading that have been doing this for years, guys, they still don't have risk management and they still lose money. Because if you don't have risk management and the psychology that we will see later, you cannot, okay, survive in the markets. That's not possible. That's non-negotiable. And the strategy here that I showed you, you don't necessarily need to use that one. You can use any other strategy you need. The only thing is that you have to get an edge against the market. And for example, with this, I think that I have an edge because I have a high win rate with this strategy, and I can spot, okay, some divergences in the lower time frame to get some daily movements that made me able to make profit off trading. But you can have other hedges. That's not really about the strategy. I just wanted to show you guys my strategy. But what is really important and that we all need to have, okay, not necessarily the same rules, but it's risk management and psychology. And so the next part of this video will be about risk management. So now we will go through some data, some mathematics, and I will explain you guys why trading results are per mathematics and they are not emotions, okay? So what is important to get with risk management is that everything is measurable and you can track the data. And this is why you guys also need to have a fucking trading journal. If you are not journaling your trades and you are not getting data from yourself, from your emotions, from your system, from your entries, your exits, and all the metrics you can have from trading in order to get a win rate, in order to get data from a Sharpe ratio, the expected value of your trades, okay? You have a bunch of statistics and data that will help you to become better thanks to trading. Sorry, so let me put my camera here back. So most traders lose because they feel the risk instead of measuring it, okay? And it's normal to have risk in trading. It's normal to lose. We will see that you guys will experience a big losing streak in your trading career, and that is totally normal. That is just mathematically like an obligation. Like this is 99% sure that you guys will experience within 1,000 trades 5 to 7 losses in a row. We'll see that later. So yeah, emotional trading leads to inconsistent position sizing, arbitrary stop loss, and catastrophic drawdowns. And we will see why you guys need, okay, to avoid arbitrary stop losses, to avoid catastrophic drawdowns, because they are very tough to recover. So the first thing that is important is that the R multiple system reveal why win rate is misleading. Some people will say, yes, I have a 90% win rate, but even if you have a 90% win rate, if the 10% losses you do are insanely big, you're not profitable, okay? If you don't have, the win rate doesn't mean anything if you don't have a system with a measured risk, okay? So for example, this is why we use 1R, 2R, and we calculate the risk instead of calculating in dollars or just in percentage. You calculate it in R, and 1R is a fixed percentage that you don't change. You stick to it, okay? You can change it based on A plus, A minus, etc. setups. For example, on my A plus setups, I risk 1 to 2%. On my A setup, I risk 0.5. On B setups, I risk 0.25, or just keep the trade. And so you can go on like this. For example, trader A, okay, he has a 30% win rate, and he won 2R, he lost 1R. He's positive, he's profitable with 30% win rate. While the trader B, okay, 60% win rate, 1R profit, 2R losses, he's negative, losing. So you don't need to have, okay, a high win rate to be profitable, or it doesn't mean that if you have a high win rate, you are the best, because this doesn't mean anything. Now, the brutal mathematics of drawdown. So here we can see that depending on your drawdown, you will need, okay, in order to recover the drawdown, crazy gains. If you're done 50%, you need 100% to get back to break even. And for me, under like around 30%, your account is kind of dead, because just to go back to break even, you need to make 43% without losing more money. And this is very complicated. At 40%, 50%, your account is dead. Like if you need to recover 66 or 100% to go back to break even, your account is dead. You just create a new account, create a new journal, and you start again, and you see what was not going on, and you have to make changes because of that. And yes, like Jordan's destroy trader psychology, and this is the thing that also made me lost a lot of money in the past, because when you're at a drawdown, psychologically you're impacted and you forget about risk management, and you just try to get back, because 20% you have mild stress, still confident in the recovery, but you will try to make it. 40% panic sets in, reverse trading begins because you really need to make back that money, and 60% is completely over. So my solution, guys, is to never let drawdowns exceed 10 to 15% drawdown, okay? Through strict daily and weekly losses, small losses are manageable, big losses are catastrophic, and both mathematically and psychologically, okay? Now, there is something very important that we need to think about, is the losing streak probability, okay? And what's normal versus catastrophic. So, if your win rate is 50%, a 5-loss streak is statistically normal within 1,000 trades, okay? Simple. Most traders blow up because they expect to win every day, and that's also something that we will see later that is kind of linked to the psychology. But when it comes to trading, guys, most of the traders, they are very psychological about that, because they cannot afford to lose. Like, you have to accept losing when it comes to trading, because it's part of the game, okay? When you enter in a trade, you have two outcomes. You either have a win or you either have a loss, TP, SL, okay? Maybe while you are trading, you will have a TP1 and you will be stopped entry, okay? But this is after. When you enter a trade, you have two outcomes, TP, SL. You make money, you lose money. And both of them are totally fine. You don't have to be greedy when you make money, and you don't have to be FOMOing or wanting to make revenge trading while you are losing, okay? You just had the trade to a trading journal, okay? And you just wait for the next trade, and the war keep going, and you just keep doing what you know to how you just keep doing your trading, you just keep following your system, and that's it. And if you have a risk management plan, and if you have risk management rules, it will be easier for you to make money over the long run, and to respect this, and to be psychologically healthy. Because imagine you risk 5%, 10% per trade. You will lose a lot of your accounts. If you make a 5 losing streak and you risk 5%, you are down 25%. That's nonsense. But I get you. You are trying to do trading because you want to make quick money and you want to be rich, etc. I'm telling you this right now. This is not the mindset you have to get, and it won't happen like this. Like if you think like this, and I have a lot of friends, they know what I'm doing, they know me since a lot of time, and they know that I'm making good money, etc. And that they're intrigued because I'm young, and they're like, oh, how can he do that? And they ask me, Diego, I want to do trading, I want to make money. And whoever tells me that, I can guarantee you that he would never be a successful trader, because the moment he thought about trading and why he wanted to do trading was not because of the fact that he loved the macro, that he was interested in trading, that he loves the game of trading, that he loved to analyze the market, etc. Because at the end of the day, you have to like this, because to spend days, hours in front of the screen looking at data, this is boring if you don't like it, okay? Personally, I love to play with my indicators. I love to find new strategies. I love to backtest. I love to do all of it. If you don't like it first, it's kind of dead, okay? You cannot do that. The second thing is that if you are doing it for money and you are chasing money, you don't have the right mindsets, or at least in the short term, you can do it like in order for this to be your job, okay, to make money on the long run, etc. But it has to be on the long run. It don't have to be, okay, I want to make money now with trading. I want to double my accounts in like 1 month. No, this won't happen, okay? What I want to do personally, what I target is like 2 to 5% monthly. And even that is high compared to the average profits, okay? It's just because I'm not trading with hundreds and billions, okay? Because like the bigger the size you have, the harder it is to trade with it, because you can move the market, etc. But if you have between 1K to 10 million, you can do like easily 2-5% a month with trading if you have the good strategy and if you have the right risk management and you have the right psychology. So it's completely normal, guys, to have a losing streak when it comes to trading, okay? And depending on the win rates. So if you have a very low win rate, like 30%, in 100 trades, you will make 5 to 8 losses in a row. That's statistically proven, like that's sure. Even if you have a 70% win rate, you can make up to 4 losses in a row based on mathematics, based on probabilities. I was lost. And yeah, so this is very important to know, because most of the traders, when they have consecutive losses, they start to FOMO. This is something we will see later here, okay, with the trading psychology and the mental game of trading, and why psychology matters. So this is something we will see just after this. But basically, this is something you guys have to know. And that's, again, I'm repeating myself on this, but I want you guys to accept the losses, okay? It's normal to lose. You cannot win all the time. And whenever you will have this switch in your mental, thanks to risk management, because you need to have risk management to get that flip, okay? Once you have that, you will see that whenever you take a trade, you don't give a shit if it goes to TP or stop loss. And if you actually give a shit, it's because you are not respecting your rules, you are overexposed, and you are doing completely bullshit. Because that's how it is at the end of the day. If I take a loss, I don't give a fuck. I wait for the next trade, and I trust my system, and that's it. That's it, okay? You guys can see my streams. When I take a trade, I put the music, I do some jokes, or like, for example, the price is pumping, I put the pump song. When the price is dumping, I put sad music, and I'm playing like the comedy, because I don't really care. It's like I took the trade and it will go to stop loss or to TP. That's it, okay? So that's very important, guys, for you guys to know it. So how to prepare for losing streak, okay? So you have to have a percentage risk per trade. So if you have 1% risk per trade, you have 5 losses in a row, you have 5% drawdown. Psychologically manageable, easy to recover with 2-3 winners, that's fine, okay? 5% per trade, 5 losses, 22% drawdown, because it's compounded, so it's not 25 flat, it's 22. Psychologically devastated and requires 29% to recover. That's very, very hard, and you probably lost your account here. 10% risk per trade, 5 losses, 41% drawdown, account destroyed, require 69% to recover, your account is dead, it's over. So the rule is risk small enough that your worst case losing streak won't destroy your accounts or psychology, okay? So you have, okay, to look at the math. If your win rate is this person, this person, this person, this person, okay, the highest losses in a row you can get, so 8, 7, 6, 5, 4, depending on mathematics again, okay, that's just pure mathematics. And in order to get a clear win rate, you have to journal your trades again. So I want you guys to open, please, a trading journal to track your trades, okay? And yeah, and so basically you guys need to do that. And this is why risking small is good, because at the end of the day, you will see that if you guys are not really having risk management or entering with, I don't know, like you enter a trade, you just long with 3x leverage your account and you're like, okay, I will close if I'm in loss, if it's invalidated, and I will TP when I think the price is going to my levels. So, but that's not trading, that's gambling. You're just guessing here. And you have to use risk management. At the beginning, it will be complicated. It's like stopping cigarettes. Like you're addicted to this. You're addicted to the risk. You're addicted to the dopamine, okay? But whenever your mind and you can accept to take 0.5, 1%, 2% for some trades, risk per trade, mentally it will be a crazy shift, guys, and you will feel like so much better. So trust me, I want you guys to try this because this is like literally a game changer. So let's see if I have some other things to do here. Yeah, that's something important that we will talk about. Well, we can close that and we can go before the psychology, but I will just finish here talking with you like that. So when it comes to the rules, guys, when it comes to the trading rules, you have some principles also, okay? It's not only like I risk 1% per trade and that's it. You have to get clear rules in order to beat the psychology and have a nice risk management plan. So the first ones are rules in terms of maximum losses. So for example, on a daily basis, my rules are either I get 3 losses in a row and I stop trading for the day, I'll just come back tomorrow, or I lost 3% of my account on a day and I stop, I come back, okay? So because sometimes I will take 0.5%, I will take 0.5% trades, okay? And so I will lose less than 3%, but as I made 3 losses in a row, I stop, I come back tomorrow, I'm mentally impacted, I just lost 3 times. The probabilities for me to be triggered and to do risk, to do revenge trading are increasing because I'm losing. So I'm a human and human behavior is to be greedy, to have FOMO. So I don't want to do that. And so in order to avoid that, I have my rules and I just have to follow them. And that's it, okay? Then you have the max weekly drawdown. Same thing. For me, it's 6 losses in a row. 6 losses in a row. I stop trading for the week. And I only take a trade if I have an A+ setup and it's a swing trade with like very wide invalidation. So I'm not in the screen all day, okay? And this, I just take the week for me. I work on other things. I work on my businesses. I do some other things and that's it. It's fine. There is 52 weeks in the year. There will be other opportunities. Or I'm down 6% in the week. I just stop and I wait for the next week. Another rule is to never add 2 losers. Most of the traders, they have this problem that they will add to their losers, okay, that will either remove the stop loss or they will add margin to their losing trades. And when they are winning, they will cut the trade too early or they will just not hold into their target. And at the end, the price goes to full TP and they just FOMO. And so like, this is crazy. So a rule, never add to losers, okay? If you have a stop loss and your stop loss was here before you took the trade, that's because you had a setup, because your system told you that my invalidation is here. I respect it, I take the stop and I wait for another trade, okay? Never widen the stop also. So never remove the stop, never widen the stop. This is very, 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 very important. And another rule for me is when you take a loss, you take a 5 minutes to 15-minute break. You go outside, you play a game of Rocket League or a game of poker or you smoke a cigarette. I don't know. Like you do something 5-10 minutes, not in front of the charts. You disconnect and then you come back. Okay. You have to reset your mind for a very, very short period of time. And this is very, very nice also because that helped me to not be triggered and be like, oh shit. And then this moment where you are long. Okay, the price dumps and so you get stopped and then you go short and the price goes up. Like, I'm probably sure that you guys experience this because I think that every traders experience this when they were revenge trading, and this is very, very bad. And then you don't have to do revenge trading. Of course, revenge trading is very bad and you cannot do that. Also, you only size up when your journal proves consistency in this kind of setup, and you know that based on data in this setup I have more chances to win, so I size up. But when I size up, I go 2%. 2% is already 2x your risk if you risk 1%. So if you think about it, that's huge. If you think about the percentage increase in your risk, you're doubling down your risk. That's insane. Yes, that's only 2%, you will tell me, but you're doubling down your risk. And so this is very important. And to conclude this, risk management gives you longevity, okay? And longevity gives you consistency, and consistency gives you freedom, and freedom gives you pussies. No, I'm joking. So most traders blow up because they treat trading like a casino, like gambling, and not like a business. So now, before jumping into psychology, which is honestly the part that changed my entire career and my trading path, okay? If you're listening to me right now and you feel like this, for example, you've been trading for a while, but you're still inconsistent, you don't have a clear roadmap or a clear path to follow, you keep blowing accounts from emotions, you want this as a skill, as a career, and you really want to make it in trading, or you want to become financially free within the next year or the next 2 years, because it won't happen in 1-3 months. I guarantee you that this won't happen. You will make improvements, okay? But you won't be financially free in 3 months, okay? If you do day trading, because that's really not how it works. Then you don't need more videos. You don't need all the TGR, PB trading, all the videos of all the YouTube gurus. You need a structure, a system, and someone to guide you. And this is why I created Beyond the Chart and my mentorship. This is not a signal group. Well, you still get my analyses and my trades, but this is not the purpose of this group. It's not a copy trading scam. It's a real process with data, psychology, execution, accountability, and we really follow you guys in the program in order to give you the best value and to really put you into another level when it comes to trading. So if you want to check it out, guys, the link is in the description to book a call with me or a member of my team to see if you guys are fit for the mentorship. And so now we can go into the trading psychological parts. So let me remove this. So honestly, psychology is probably the real reason you are losing money, because it's not really about the strategy, it's not really the entries, it's not really the tools. Well, it can be the risk management, but for me, psychology and risk management, they are linked. But the reason you are losing money is you. And the reason I was losing money when I was trading and I was older and I was not making money was me. Because trading exposes your weaknesses as a human. Impatience, greed, fear, lack of discipline, ego, need to be right, lack of structure. All of these things, you probably recognize yourself in maybe all of them or maybe a few, but it's the reality, guys. And if you guys cannot handle that, you guys will lose. And psychology is not bullshit motivation. It's not mindset codes like Andrew Tate. Like, it's really controlling your impulses, following your plan, okay, that you prepared before, cutting losses fast, not trading when emotional, this is very important, and staying consistent for months, not days, and even not months, but years, decades. And here are the real psychological rules I follow. So the rule one, guys, is if I'm not at like 8, 10 mentally on 10, I don't trade. If I don't feel good in the day, I just don't trade, okay? Maybe because of sleep, stress, distraction, I went out the other day, or there is, for example, I don't know, Champions League night, or I won't trade, okay? I just do something else, this is fine. I will have other opportunities later in the week or in the day. Rule 2, I accept being wrong. I am not attached to any trade. I execute and I just get out if it's invalidated with my stop loss, or I get out if it hits my take profit, and that's it. I don't want to do more, okay? Rule 3, I don't fight the market. If price shows me that I'm wrong, and that's it. It was the market, my strategy gave me a trigger, the trigger didn't work, it's good. On to the next. My win rate is not 100%. It's 60%, 70%, 30%. So I can be wrong. The strategy can be wrong. So it was the moment it was wrong. On to the next trade. Rule 4, I don't chase. I don't FOMO, okay? I don't cook. I don't clean. Sorry, I stopped the jokes, okay? It's finished. But basically, FOMO destroys accounts faster than losses, because after this, it's a psychological cycle where you will be emotionally impacted and you just lose everything. And rule 5, the most important one, guys, is I protect capital, because capital is freedom, so my trading capital, and also my trading capital as a trader is like oxygen as a human, or like your blood. If you don't have blood or oxygen, you cannot live as a human. If you don't have money, if you don't have capital, you cannot live as a trader. That makes sense. So your number one focus, when it comes to trading is really to focus on preserving your capital. And so in order to preserve your capital, you have to master your psychology and you have to get risk management. So let's end on these little slides that I prepare for you guys for the trading psychology. So the mental game, okay? How is the market looking, by the way, right now? Dumping, okay, pretty nice. Our setup might go to TP. We're at Monday lows, but I still feel like this goes lower. But that's not the focus today. Is trading psychology, the mental game. So most of the people, they lose because of psychology, not really strategy. Well, risk management also, but for me, psychology and risk management, they are inside the same thing. Okay, they are like basically there are three pillars in trading: psychology, risk management, and strategy. But risk management and psychology, they are kind of like twins. And so here are my 7 deadly sins of trading. First one is FOMO, so the fear of missing out. Jumping into trades without proper setups because you see others profiting or fear of missing the moves. And this is something also that you will get from the social medias. So I don't know, on social medias, you will see younger people than you making a fucking ton of money, driving Lambos, having Rolex, having like richer meals and all of this stuff, being in private jets, and you'll be like, oh shit, I'm too late, etc. I need to take more risk, I need to make more money. This is the matrix, guys. This is how you guys will get stuck in like the situation you are currently, because you cannot gamble for your life. You have to take clear steps, and FOMOing is one of like the 7 deadly sins of trading. And if you can, like, that's maybe the one that, in my opinion, is killing most of the people, because at the end of the day, when you revenge trade, when you try to enter heavy on cryptos, etc., when the prices are already up, is because you are FOMOing and you want to make money while the others are also making money. So another thing that I suggest you is to reduce the noise on, for example, X or social media. So you guys have to focus on following the good persons, etc., and removing the noise from the scammers and the gurus. Then there is revenge trading. Trading to get back losses immediately. This is why we have the rule where we just step back when we take a loss. And because if you revenge trade, you ignore your rules and you are often doubling down the positions out of anger. And this is something you guys cannot do. Another thing which is kind of revenge trading is over trading, okay? Taking too many trades, forcing setups and not setups that don't exist, and trading out of the boardroom rather than opportunity. Sometimes you hear and you like, it's dopamine, you guys. It's like being on TikTok, okay? It's, you want to trade, you want to enter a trade. Okay, I need a trade, I need a trade, I need a trade. No, just wait for a setup. You go on TradingView, you go on your trading softwares. You can put alarms. Look here on TradingView. Here I have an alarm. Here, like yesterday, I was not really looking at the price. The price went to my alarm here at this POC. Okay, so at 92K500. I got an alarm. Oh, price is at my entry level, at the level I want to maybe enter a trade. So I look at my phone. I went on my screen, on my computer. I saw the setup. I was like, okay, that's a good setup. Instead of being for like 4 hours waiting in front of the chart for my setup like this, and so my brain would be fried because I will be on the chart for the whole day, and when the opportunity comes, I'm not fresh and I cannot think properly. So this is something also very important, guys, okay, to stop overtrading and stop chasing trades every time. Moving stops, we told about this. Wanting you stop to avoid losing being stopped, that's completely bullshit, guys. Please don't do that. Cutting winners early again, okay? You have a plan, okay? So if you can hold into your stop loss, why can't you hold into you take profit, guys? Okay, you have a plan. Okay, you enter here, you enter 100, you say, okay, I think that if you enter, it's because there is more probabilities that the price goes to this level rather than going to this level, and so this is why you long here, targeting here with stops here. And so just play the probabilities and play the setup like fully, like that's it, guys. Then holding loose just too long, okay? So refusing to accept the losses, hoping for reversal, moving stop, or not having one at all. That's completely bullshit. You guys can do that. This is crazy. And then over leveraging, okay? We will do a little course on leverage right now. So for example, because sometimes I share a trade with like 100x leverage and people are like, oh, you're going 100x leverage, you're crazy. You're crazy, man. No, like that's not how it works, guys. Leverage means nothing, basically. What matters is, okay, the notional of your position. So for example, let's say I have a 100k account, okay? I have a 100k account, and if I enter, I can enter 100x leverage with only $100. So at the end, it will be 100, 1,000, 10,000. So it will be a 10,000 position from $100 margin. And at the end, I took a $100, 100x leverage position on, for example, Coinbase, or I don't know, but my account is 100k and I took a 10,000. So at the end, I'm not even exposed like 10, I'm exposed 10% of my account, but I took a 100x leverage. While some people, they say this because they trade with like 2, 3, 4x leverage, but when they enter a trade, they don't have clear rules and they just all in their accounts with leverage and they just press buy like monkeys. And you cannot do that. You have to calculate. Why I use leverage? Because I use unified accounts and also because I want to keep margin, okay? So for example, if I enter in a trade, instead of, for example, I want to long one Bitcoin and I have 100k. Bitcoin is now at 90k. So if I enter without leverage on Bitcoin and I long one Bitcoin, I can, but I will only have 10k USDT remaining on my account. While if I long with 10x leverage with 9k, I still have 91k in my account, and USDT remaining, and I took the same position, okay? So this is how you play leverage, is just to keep margin in your account. It's not to overexpose yourself, it's to increase the exposition from the margin you want to use, but it's not to over leverage your account, okay? You guys shouldn't have, okay, the total notional of your position bigger than your account, okay? And if you have it, you have to calculate the risk and to risk like 2, 3, 4% maximum within all the position. But you cannot like be exposed to your account. If the price goes down 33%, your account is burned, like you lost everything. And this is how people lose money because of leverage. So be careful with that and really try to understand it. By the way, let me maybe in the comment if you guys want like a full masterclass on leverage, how to use leverage, how to use unified account, etc. That could be interesting. I already did it in the school for my students, but maybe you guys would love to have it. So now that was it for the video, guys. I hope you guys enjoyed this big trading masterclass. Okay, so that might be like a 1-hour course, something like this. So I try to do my best, guys. I try to go all over like all the trading system I'm using and giving you basic explanation, but something that you guys can understand and maybe use in the future. Of course, you guys can see me streaming every day as the New York session on YouTube. So if you didn't subscribe to this YouTube channel, so if you are still not subscribed to this YouTube channel, guys, make sure to subscribe and come with us to the streams, because we are also taking live setups, so that could be nice. Ooh, this is looking sexy for a take profit. So yeah, I hope you guys love this kind of videos. So if you do, make sure to comment the video, to like and to follow. So thank you guys for watching till then. Okay, if you watched the video till now, comment a fruit in the comments. We will see who are the ones that stayed until the end. And so yeah, see you guys soon, hopefully. Have a good one. That was Diego. Bye bye.